Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders. We got Keith Harwood here. Keith, great to have you with us, man. How you doing?
Doing well. How are you?
I'm doing great, man. Long weekend. We're setting up for a short week. Not sure when everybody's going to be looking at this, probably on Wednesday morning, but we're here Tuesday and we are looking at the markets free falling right before the open here.
Yeah,
Futures are definitely not happy. A lot going on. Big news on the tariff front. We got the jobs payroll coming up. Again, every week I think at some point it's going to get a little bit more. I don't even know what normal is anymore, but more normal. And every week it's just something else kind of whips on this market around and tossing us like a rag doll. So great to have you here. I'm counting on
absolutely.
you to provide some sanity for us here. If you can help us kind of navigate what's going on and see what we should be looking at.
Absolutely. Yeah. So I think you keyed in on the two big things that I'm looking at right now. Number one, the tariff news from Friday with the court ruling creates uncertainty for the market. So the market has a natural reaction of saying, okay, well, now we don't know exactly what's going to happen. So I better take some risk off and reevaluate. And so we dip. And we've done this over and over now over the last few weeks. Non-farm payrolls on August 1st, we dip. And then we rally back to a new high. And then we're worried about what Powell's going to say at Jackson Hole, and we dip, and then we rally back to new highs. This week we had non-farm payrolls already, and there seemed to be a natural inclination to follow that same protocol. A little bit of risk off ahead of time, and then after the news and the certainty, then we can rally. But what we did on Friday creates uncertainty as opposed to giving certainty to the tariff situation. So the reaction is actually the inverse. If we had certainty after it, if they just shot down all of the appeals, I kind of believe that maybe that would have at least given us the path forward with tariffs, and we start to drive towards certainty. Now this kind of opens up a bunch of scenarios and creates question marks for people. Add on top of that the normal reaction of a little bit of risk off ahead of the big number on Friday, and you see us down 1.2% this morning in the S&P 500, testing the recent lows. So the lows from just a couple weeks ago, August 20th, were 63.62. So we didn't quite breach that. Doesn't mean we won't today. Doesn't mean we won't tomorrow. But right now we're in this dip mode. But I will note that we've continually had higher lows and higher highs. Now, if this is actually bad, we'll stop having higher lows and higher highs. We'll start having lower lows and then turn into a potentially bearish behavior. So the market has to decide right now, is this another dip to buy? Or is this actually the problem point that we've been worried about that drives us back down to a bigger number like 6150 or 60, I mean, even 6250 from current levels around 6400. So, we're kind of getting into an inflection point here. And so it makes it a little tougher, but there are a lot of tools I think out there to help guide, look for opportunity, to find the risk, and look for some positive expected value. And that's my big thing for today, is looking for some potential expected value trades that may be actually better today than they were on Friday as a result of this dip. Where can I buy the dip without really putting too much money at risk?
Right. So I think you kind of answered the question I was going to put out there is like, when do we worry? When is it right to worry?
Mhm.
It can be unsettling when you get these drops, but to your point, these are higher highs, higher lows. So that's still a bullish trend. The
Mhm.
lower low, maybe it's the 6250 mark is, all right, you better fasten the seatbelt at that point and, bunker down because it could get weird.
Yeah.
Until then, we are still in that uptrend, even as unsettling as
Yes.
it can be. I mean, that's really the point for me is like, all right, we keep seeing these kind of downside tests, and they haven't been strong enough to break the trend. When will we worry? Not yet. Like I said, to your point, you can give us a red flag to watch out for.
Yeah, absolutely. And I think that's the thing that the market's trying to figure out right now is, do we need to keep dipping if every dip is a buying opportunity? Or is one of these dips finally going to break? And, it's obviously sort of like, oh gosh, we go down. why do we have to go down if we're just going to go back up, or why not go down further? I mean, it's kind of all both scenarios, but that's ultimately what this market's trying to figure out is, should we be dipping on these on these updates, or should we just continue higher and ignore the noise? And right now, maybe they're wondering if this one's not just noise, this one's a real signal. And if the economy is showing bad non-farm payrolls on Friday, and we've got uncertainty in tariffs, does this impact the Fed's decision in 2 weeks? And, trying to piece together the puzzle when there's a bit of a haziness out there right now, a little bit of a fog over this market, trying to figure out how it all comes together and how we move forward. So I think it's
Yeah,
the right thing to dip here with the uncertainty.
right.
But
Yeah.
is it the right thing to go further down, or is it the right thing to buy that dip and take some of that uncertainty off the table? Maybe it's on Friday when we see Friday non-farm payrolls. If that uncertainty is gone, and then people have more confidence that in the Fed's behavior on September 17th, I believe it is, then that may start to give a little more confidence to the buyer instead of a little bit of a, I haven't really gotten paid for buying. I've only gotten paid when I buy the dips. I don't really know if I want to buy the dip. Maybe I should buy the dip. Nope, we went to a new high. I better buy this before I miss out. Oh, here comes another dip, and lather, rinse, repeat. Where on the short term, those traders trying to buy breakouts are not getting paid off right now.
You also see any of this? Would you think it's some of it's like rotation? So you see a
Yeah,
sell off so people can free up capital and then they can move it to someplace else that they're looking at. I mean, we're seeing tech kind of
yeah.
outpacing the drop here a little bit. Maybe people are starting to get a little soft on the AI bubble and they're shifting it over. And then you see it go back into the market and then you get that recovery and that kind of rotation. It's never a perfect orb, it's not a perfect circle, more of an eccentric where it kind of wobbles a little bit and you get these down these dips and things, as people are kind of shifting.
Yeah, no, absolutely. So you see like tech made their high, or QQQ, the Nasdaq made the high on August 13th. And then we started having some of that rotation out prior to the Jackson Hole speech by Powell. Then after that speech, when the market went back to new highs, tech didn't. So yes, 100% we're seeing some of that rotation moving out of growth, moving out of AI. Palantir didn't necessarily do great. Or, another one that people look at a lot for AI is
Nvidia,
Microsoft.
also
Microsoft
Nvidia
had,
showed a chink in the armor. It
yeah,
showed that it had just one little flaw, and that was enough to keep it from hitting that side, back up to that high there. But yeah, Microsoft's
yeah.
another one. Sorry, I interrupted you.
No, no, yeah. I mean, I was just going to point like Microsoft, they had great earnings and were below the level pre-earnings. So people
Mhm.
took that opportunity to take profits in a company that had great earnings and blew it out of the water. And then here we are, lower than we were before earnings. Nvidia that you just mentioned, they had earnings last week. Seemed like everything was good enough, but it wasn't 100% perfect. So we didn't make a new high. We pulled back after earnings, and we're going to be a little bit weak again this morning. Um, so we're going to see this coming down a little bit further as we start the new month, and we'll see how low NVIDIA can go and how low tech can go. But within that, as you mentioned, small caps are doing okay. So small caps have been a long-term laggard. IWM has been, just slow to get moving here. If I actually back out here on IWM over the last year, you can see that we are not at the all-time high. The all-time high was made in November of 24. So there's a lot of catch up in that rotation. And to me, it signals that people are looking for opportunity with a better value versus maybe tech has been priced for perfection. Small caps have not been priced for perfection. So it creates this confidence that, well, you don't have to have perfection for these small cap companies to do okay. They just have to do better than they were, the last 6 to 9 months. And tech has to be perfection to continue at the rate that it's going up. And we're not seeing perfection. We're seeing close to it. Well, close is not enough. We need to be right on that perfection level. So a new opportunity being driven by the market, looking for some places where things can go higher. And who knows? Maybe it was even just hearing Warren Buffett saying he wanted to buy into UNH started triggering this thought process that we need to look for opportunity on the stocks that have been underperforming, because UNH has been a disaster for the last 6 months plus. From a
Mhm.
$600 stock to a $300 stock, and that's where Warren Buffett said, "I'm buying that on sale." So maybe giving a little bit of a mentality to people to say, okay, I got to do what Buffett does here. I'm not buying the all-time highs anymore. I'm looking for value in other names.
Mhm.
So yeah,
Yeah,
so we've
well,
got a interesting market for to say the least.
yeah, no question, no question. And I think I'm gonna be your devil's advocate on the small caps. I think you got to watch there's a move going on with these tariffs that and this might just be me being very focused on my personal experience, but and a company I used to work for shipped a lot of small packages, and they are going to take it in the teeth with the kind of the elimination of the exemption for small packages and the tariffs.
Mm,
That is going to be a train wreck. Not only is the cost going to be challenging, but the logistics because of the Deutsche Post is stopping shipping. So that is going to hurt a lot of smaller companies that are kind of drop shipping or sourcing from overseas to kind of get their inventory and stuff. And I think they're going to probably feel a disproportionate amount of the impact than the larger companies because they don't have the resources to just build a whole new logistics network. They can't just pivot to a new logistics
yeah.
network. So I'm gonna take the other side of that trade on you. Seeing
Yeah.
that the small caps could jump a little bit. Well, I'm a little bit more nervous now. I will put asterisks next to that is very subjective based on my opinion. It's just kind of my instinct telling me. So you're looking at the charts. You're always smarter than I am. So.
Yeah, well, so that is that's the good thing about a market. What makes a market is having buyers and sellers, right? So if you have one opinion versus I have a different one, that's what creates a market and creates an opportunity for someone. Usually there's one winner and one loser. I mean, the exchange always collects their fees, but the market is that's a winner and a loser on the other side of the trade.
Mhm.
One thing I will note though is within that small cap space, one of the things that I actually have seen really going well is regional banks. So regional banks may be less subject to some of the stuff that you're referring to. And it
Mhm.
looks very similar to the small cap chart, the IWM chart. IWM, the biggest three sectors are financial, healthcare, and industrial. So maybe that creates that concern over the industrial side of the small caps, but maybe less so on, financial or maybe healthcare. Um,
Mhm.
so, it's you get down to the subsectors and all of this other stuff, and it creates a question mark of where the opportunity is and where the concern is, and then kind of filter down to the name that makes the most sense for a trading opportunity and potential dip buying if that's your style here, or if you're looking for a
Mhm.
continuation to the downside, knowing where to focus the bearish bet.
Yeah. Yeah,
So,
good point.
yeah.
Yeah. So I know you always come in locked and loaded, and you've got something
Yeah.
that's caught your attention that you are going to share with us. So I'm going to put you in the hot seat now, and let's take a look at what's on your radar today.
Yeah, so first things first, we'll go to Comcast just to give an update. It's going to be down a little bit today. The October 35s, they're not currently showing, but they were about 10% higher than they were last week. So just to give a rough estimate, last week they ended up at about 62 cents, I guess, by the
Hmm.
close. Now they're going to be a little bit lower. So they're going to be probably about a break even. Uh, Telecoms and things of that nature don't necessarily go south when the market's going south. So this seems like a pretty safe trade for the moment. Pre-market maybe slightly down, may actually end up being unchanged. For now, probably not the best trade, but not the worst trade. It's a relatively safe haven trade. But I digress. So we'll move on to a better opportunity that I think is setting up this week because right now Comcast isn't going to be dynamic to the upside, it seems. Maybe it
Hmm.
does end up that way by the end of the day, but for now, just kind of a chop market since our talk last week.
Yeah.
Um,
The question there is, would you take the trade today, and how fast do you want your money to work for you, right? So if you're
exactly.
comfortable with it taking a little longer time frame, maybe this is a great place to be with all of the kind of clouds on the horizon. But if you're looking to kind of say, all right, let me jump in and see if there's a little bit more of a quicker return out there, that's where we're shifting to now. So yeah.
Exactly. And when I'm looking at stuff to reduce in my portfolio, I'm not panicking about Comcast. I'm not saying I got to hit the bid in Comcast and get out of that immediately if the market liquidity is a little bit funky in the morning. When I've got a market that's down, 1.5%, depending upon the sector that you're looking at, S&P's down 1.1%, semiconductors down almost 2.5%, tech down 1.5%. Comcast isn't my major fear, my major concern, the panic sell button. Where I'd be more concerned is going into tech or some of these other bigger names that are having a bigger move today. Even
Mhm.
Palantir down another 3.6% today. These are the things that I would address first, is the stuff that is really getting hit today, reevaluate them and decide if I want to stay with them. Where Comcast, I could potentially be a little bit patient and say, okay, I can come back to this, reevaluate it once the market settles in this morning and see if this is actually going to have a bull trend because of a flight to safety, or if it's going to be part of the market pullback, and decide based on that. So, if we get down towards like, the lows of Thursday, 33.26 tells me that this is creating a concern problem. But right now it's not in liquidation mode, not a major concern problem. It just may not pay off this morning. So, kind of prioritizing the list of what do I want to move on today, and Comcast would be low on the list unless it's my only position. So,
Yeah. Well, got it. Well, then what is it that you want to move into, man?
yeah, so I want to show you guys this profit accelerator trader that we've got through Yellow Tunnel. It's got a interesting setup. So it's another tool that we've got that shows some high probability bullish stock picks based upon AI. And the nice thing about this is it gives me a lot of detail in terms of where I should be buying, where I should be selling, and where I should be basically trading around the range with a bullish bias. And it comes out with a handful of names every week. This week we've got 4 trades. We always show SPY on here. Um, but what I like to do with this kind of service is it helps me filter down to a bunch of different names to then evaluate which one I think has the best opportunity, or which ones I think have the best opportunity. And you'll notice here that one name here, I'm not even going to touch. Meta. Tech's down today. I don't need to go into AI names. This is not the place to be. So for me, Meta already off the list even before I can even think about this any further. But there's other sectors out there that may be okay today, like Chevron in the oil space. If I look at
Hmm.
Chevron this morning, it's down about 13 cents pre-market, so effectively unchanged. And oil this morning is up a buck 22. So when I see oil prices up, I tend to think oil companies do tend to have a positive correlation to that. So it could be an opportunity. But when
Hmm.
I go to the forecast toolbox and combine this with that, I say, okay, well, Chevron may be a little bit choppy bullish, maybe a decent opportunity, but it, probably a lightly bullish stock. So, I'm looking at it and thinking, okay, then if it's lightly bullish in a potentially bearish market, it goes back to some of the stuff we were talking about in previous weeks, where I'd look towards a put credit spread and look to see if there is a real trade there off of a put credit spread in something like Chevron. And maybe I don't love the technicals, and personally, this isn't my favorite trade from the PAT, so I can kind of move on and say, all right, well, what about Triple M? For me, Triple M, not quite as sexy, but I actually like Morgan Stanley. And so I'm going to skip over Triple M and just go to Morgan Stanley here for a moment. Now, Morgan Stanley in the financial space fits along with that small cap thesis, avoids some of the shipping issues you were talking about. So that's, I guess a little bit of, you may have caught me. I was talking financials a little bit as a result of the fact that, I like the Morgan Stanley idea here. Now, this is not a regional bank. This is obviously big financial. But I have a couple of elements that I can combine in here and say, okay, I would look to be buying this stock when we're getting towards the lows of the AI projected range, particularly on a day where the market's bearish. So with a bearish market, I expect us to get close to that bottom, if not to it or slightly below. So around $149 a share, it could be a potential buying opportunity. I then go to the forecast toolbox and say, okay, if I can buy in around $149 a share, what's my projection for this week? Well, the projected low for today, again, is 149. Projected high in the next 2 weeks is up to as high as 158, maybe 155. And, if I want to only go for about a week, I'm looking around 154, $155. Now, I've got a headwind from the market right now. And by the way, Chevron now up on the start of the day, but let's go to Morgan Stanley. And we are actually now below that part of the range. So that does create a little bit of concern for me. But we've got a lot of support levels below this market, particularly around the 145 level. So I'm not hugely confident that we're going to break out to a new high here, but I feel pretty good confidence that this should hold above support levels, barring a major market liquidation. Now, I can never bet on the major market liquidation by buying a stock. I'm going to have to just sell the market if that's my base case. But if I believe this is a dip buying opportunity, Morgan Stanley is one of those spots where I can go out and I can take a September 145, 143 put credit spread, and that's 65 cents. So if I collect 65 cents, I need that to stay above 145 2/3 of the time. All right. So I'm risking $1.35, and it would be to make 65 cents. So if 2/3 of the time this is a dip buying opportunity, then I'm making money and I have a positive expected value. If half the time this is a dip buying opportunity, this is not a trade for me. It doesn't make sense. But if I think that there's at least a 2/3 probability of staying above these levels and being a dip buying opportunity, and actually it's getting a little bit more expensive now as the price goes a little lower, but around that 70-cent level, now I actually have an even higher premium, which means I have to have a lower probability of staying above the level in order for me to make money here. So now at 75 cents, I have to stay above 145, call it 37.5% of the time, or sorry, 62.5% of the time instead of 66% of the time. Wow, tough math here. But I have about a 60% of the time I have to stay above 145, which seems like a reasonable bet here. And it's not staying above 145 completely. It's just staying above 145 by expiration or by the time I exit. So
Right.
I can collect a little bit of premium, take advantage of the fact that implied volatility is rising here as there's some fear in the market. And this is a way that I can toe into this market without having to bet on an explosion to the upside. So I'm not going to go out and buy the 155 calls and say, I think we're going to go to 160. That's not my case today. I'm not looking for a 10% rally in Morgan Stanley. I'm just saying, I don't think we're going to go down another percent or two. I think we've done enough here. And this is a dip buying opportunity that gives me a way to compound some returns at a higher probability of success than betting on the lottery ticket. And I don't have success with lottery tickets in the last 24 hours because I did not win the Powerball. I'm sorry. So
Yeah, definitely you don't want to that kind of risk in this situation for sure.
no. And I think there's definitely opportunities here. It's just about trying to find the right ones. And I think Morgan Stanley could be one of those interesting ones. Starting to find some support here around this 146.5 level. Watching some of the intraday chart. We touched the 20-day moving average. We stayed above 145, the previous high before the breakout, in the middle of August. All this stuff points to a dip buying opportunity in a name that's not at a major liquidation point or a major liquidation risk. And that's the key to me is I don't want to be in something that's got like no support below the market. Looks like it could just absolutely liquidate. If support gets breached, sure, I've got to get out, but I'll have liquidity still at that point. Versus if I'm going in a name that's just on a falling knife, I have no liquidity to try to make my exit.
I just love when the market is just seemingly out of control to be able to find a
Mm-hmm.
trade that is have a really good likelihood of just generating income. When it's
Mm-hmm.
wild like this, not losing is as good, if not better than winning. So,
Yeah.
put credit spread puts you in a position where not only are you like really kind of protecting yourself against the drop, but then you're going to eke out a little bit of income. So
Yeah.
keep the paycheck coming in every week as you're trading, and that's critical. And the profit accelerator is really neat because we've talked about the toolbox, for weeks
Yeah.
and weeks now, and you're always out there, and I think you probably underestimate how great you are at picking which stocks to look at. But this is a tool that
I
helps
logged
somebody
out.
else who might not. Yeah, the profit accelerator is a tool that helps people who may not have as much experience trying to zero in on which ticker to drop into the toolbox, you know? So it's
Mhm.
a perfect combination, a 1-2 punch of, here, let me give you some stuff to look at and then get an idea of what it looks like. And it's putting a whole lot of horsepower behind those suggestions.
Absolutely, yeah. So, I mean, the nice thing with the forecast toolbox that we've looked at a lot is that I can put in any stock here and come up with an idea. Now, when I'm struggling to find ideas, and it happens to people of every, every trading experience level, et cetera. I have times where I can't see anything good. So I go to something that AI can filter down to me and say, hey, here are the 6 best ideas, or here are the 4 best ideas that AI sees today. Why don't you take a look at those 4 or those 6
Mhm.
instead of looking at 500 and trying to figure out in all that muck what looks best. So it's a great tool for getting me down to, all right, let me get a really short list of good ideas that have a long history of being proven successful. And then I can then filter that list down from 4 to 1 or 2 instead of having to go from 500 down to 1 or 2 or 3 trades. And when the market's easy, I can pick almost anything out of that list of 500. But when the market's tough and chopping and noisy like it is right now, the ability to have a shortened list with some really, really high probability opportunities is crucial for me.
No, absolutely, almost an unfair advantage for sure. So
Yeah,
I appreciate you walking us through this and showing us how that works and how these two kind of complement each other so nicely. So this is great,
yeah,
Keith.
absolutely.
Well,
And
great.
hopefully that
Well,
helps, and hopefully we see some market support here because I think it's better for the market if we do find support here. But if not, there will be great opportunities that come out of it. So,
yeah,
always be watching the trading opportunity and seeing what the market will give us.
definitely. Well, we're going to be tuned in and we're going to be following up on this. Keep your eye open for invites to another eye opener, and we'll be glad to have people in the room with us and answering questions and all that good stuff. So, Keith, you have a great week, and we will talk to you soon.
Absolutely. Thanks again, John. Thanks again, everybody.